everybody, it's your boy Marcus Norman from Gentleman Style Podcast Show. Today, you all are in for a very special treat. Today, we have a very special guest of mine, and he is phenomenal. He is unique, and he is here today to break down those questions you've been asking, I've been asking, we've all been asking about stocks and investing, and he's going to spill some tea. So stay tuned, stay with us, stay engaged. It's your favorite gentleman here on the Gentleman Style Podcast Show. Stay tuned. Here we go. Hey everybody, it's your boy Marcus Norman from Gentleman Style Podcast Show. Today we have Mr. Alex Mason. This young man is phenomenal with a baby face. This man would surprise you, right? He's here, he's changing the industry, and he's here to break down some unique topics around stock market investing. Mr. Mason is an investor himself, and he's also a podcast host who hosts the Stock Stories podcast and writes a stockstorytelling.com on his website. He's a MIT trained engineer who became curious about investing, and he became so curious that he studied each component of the S&P 500 index, and he's here today to share everything he's learned. So help me welcome to the stage the incredible, the amazing Mr. Alex Mason.
How's it going, Marcus? What's going on?
What's going on, sir? Welcome to the Gentleman Style Podcast Show. We appreciate you. Thank you for taking time out of your busy day to give back.
Of course. Thank you. I appreciate you having me.
Absolutely. Appreciate having you. Give him one more round of applause, y'all. Sir, you are phenomenal. And I have to ask the question. I start every question off this way, but there are some habits that successful people have, right? And those habits is what starts the day off the right way. What are some habits that you have that really sets the first thing that you do every morning that sets the tone for the rest of your day?
Oh man, that's a great question. So I'm kind of like, I like to nerd out on morning routines. So one of the things that I do every day is I go for a walk, and it's just a very basic thing. It helps me clear my head. No matter what happened the day before, I can just kind of engage with nature, think to myself, maybe listen to a podcast, and it kind of kicks off the day in the right direction. Boom.
Nuggets. He's dropping nuggets, and that's important, right? That stimulates the mind while he's engaging in mind and he's enjoying nature. That's not a nerd thing at all. That's important. We need to do that. We need to walk, right? And he's exercising at the same time. So huge. Glad you said that. Diving right in, why would someone want to own individual stocks compared to other investment options that are out there? There's equity, there's crowdfunding, there's Bitcoin now. It's all so confusing. Why would someone want to, especially in a recession, why would they still want to own individual stocks compared to what's available out there?
That's an excellent question, Marcus. I think that first of all, I think that there's many different valid investments that exist out there. There's a lot of different ways you can do it. But I think one of the things that's beautiful about individual stocks is you're owning a particular piece of a real company. And the entire economy, whether United States or global, they're built on companies. And so to buy a piece of an individual stock, to buy a share of stock, you have direct ownership of that. And so I just think that that's a beautiful thing. And history shows that owning stocks can be incredibly profitable, especially compared to many other investment options. So that's why I really honed in on the individual stocks.
Makes sense. America was built on companies, and that's true, right? And so if you want to basically play, you got to pay to play, and investing in individual stocks gives you equity, gives you a vested interest into the business of America and the business of business in general, just business in general. And so that's huge. And thank you for breaking that down so delicately. So just like I just asked, like we're in a recession, we're in a pandemic, real estate's over here, Bitcoin and blockchain is over here, Dogecoin is the new raise, GameStop is shut down. The world is crazy right now. What are your thoughts on the current state of the market right now?
Oh man, I mean, there's a lot going on. Like you said, you just touched on a lot of things that have happened in the last several months. I mean, goodness, it's
The
just
last
kind of
week,
wild.
the last couple of weeks, yo, that's a whole year. That's a couple of weeks ago. But I'm sorry, forgive me. I didn't mean to interrupt.
No, for sure. Yeah, there's been a lot going on even just the past couple of weeks for sure. Um, I would say that, uh, man, I've got mixed feelings because one thing is I'm so excited that there's a lot of interest in investing and a lot of things like the cryptocurrency, different types of real estates. The whole GameStop squeeze was a huge deal. But on the flip side, I'm kind of worried because I feel like there's a lot of distraction
Right.
and there's not a lot of focus and discussion on the investment process. So, like, regardless of what asset class you're picking, regardless of the type of product or place that you want to go, understanding how to invest in general, I think, is a necessary prerequisite to having any kind of success. And so that's kind of what worries me right now with the state of the market. Is I was looking at one of my watch lists earlier today. I'm always looking for stocks to buy, right? And some of the names that I've been looking at, they've fallen recently and there's a lot of havoc in the market, but the market is just so high in so many areas that it's hard to find deals. But I think just like having that mindset of the investor and not getting too caught up with whatever the next new thing is that gets talked about
Right.
today, that can help ground us as investors in order to make better, longer term decisions with our money.
Makes sense. Makes sense. That makes absolute sense. So you mentioned a watch list, right? You mentioned a watch list. So first thing, what is a watch list? And then what are some things that can you spill some tea? Can you give us a little bit of some tea? What are you watching right now? Can you list some of the things?
Oh, for sure. Yeah, I can share a little bit. So, a watch list is just a very simple tool that us as investors we can use to look at stocks that we want to buy. It's basically a shopping list. So, just like you have your grocery list when you go to the store, there are certain things that you want, and if you can get certain items on sale, that's all the better for you. It's the exact same thing with the stock market. So there are many apps that you can use. One app I use is called Seeking Alpha, and on there you can just create a list and just add the different ticker symbols of all the companies that you want to follow. And so at a glance on your phone, you can just pull it up and see, okay, this is what's going on in the market with my stocks today, the ones that I want. So it's a quick way to really hone in on what's going on in the market and really see if, hey, maybe you want to buy something, maybe something shot up or fell down real quickly. You can get those kind of insights really quickly if you build yourself a watch list. Yeah.
Love that. So we all need to develop. That sounds like a shopping cart, and my shopping cart is full right now. I need to empty this bad boy out. But anyway, it sounds like a shopping cart, right? And that's important, right? So are you watching like things like Tesla? Is Tesla on the radar?
For sure. Yeah, I've got Tesla on one of my watch lists. That's a very interesting one. I did a two-part series on it. I spent probably about several hours of research trying to understand that company because it's so intriguing, and I think a lot of people intuitively understand that. But Tesla is just one of those that I just kind of scratch my head on because I can't figure out if it's too expensive or not. I know it's a great company. I know they do amazing things. I just want to make sure as an investor, I'm going to be getting good value for what I'm paying for those shares. And that's, I think, one of the trickiest parts that like a lot of beginner investors make is they know the company, but then they pay way too much for it. And so the returns that they get in their portfolio is not as good as the actual business performance. So big difference between business performing well and like your stock performing well. So yeah, Tesla's on the watch list for sure, but we just got to see what happens.
Love it. Love it. Mr. Alex Mason, y'all. Fabulous, fabulous. We have one quick commercial break from our sponsors. You guys don't go anywhere. Stay tuned, stay with us, stay engaged. We'll be right back.
Support for Gentleman Style Podcast is brought to you by Manscaped, who is the best in men's below-the-waist grooming champions of the world. Manscaped offers you precision engineering tools for your family jewels. Manscaped just launched their 4th-generation trimmer, the Lawnmower 4.0. You heard that right, the 4.0. Join over 2 million men worldwide who trust Manscaped with this exclusive offer for you. 20% off free worldwide shipping with the code GENSTYLE at manscaped.com.
Hey everybody, we are back to the Gentleman Style Podcast show, and today we have the incredible Mr. Alex Mason, stock storyteller extraordinaire. And this man is phenomenal. He just broke it down, y'all. If you missed it, if you just missed that, he just broke down what's a watch list, what he's watching, which is big, right? What he has his eyeball on, and what he's watching to see how they perform. And this man is here today on the Gentleman Style Podcast show to break down what it is and how to invest properly and what to look for, some things to consider. Mr. Alex Mason.
All right.
You are phenomenal, sir. Thank you for delicately breaking that down earlier. That's huge. And so I have a question for you, right? What is the average investor? What is someone who's beginning to get in the game or wanting to get in the game? Where should they start? How does someone begin their investment research? What things should they look for or what should they consider about a particular stock before they invest in it?
Yeah, I think there's a lot of ways like we could go with that. But one of my favorite things to do is I think about when I was starting, and one of the things that you can do if you're just getting started is look at some companies that you're already familiar with, companies that you already kind of know or have some like real experience with in your day-to-day life. And then go ahead and Google, see if they're publicly traded and what their ticker symbol is. So if you eat at McDonald's all the time, ticker symbol MCD, go check that out. You shop at Target, ticker symbol TGT. You shop at Amazon all the time on your phone, AMZN. Go ahead and just do just a little bit of research on companies that you already actually kind of know, because you already have that seed of knowledge. So you might as well just expand it further. Things will make more sense to you when you're researching because you're already kind of familiar with the product. So I would say do that as step one.
Perfect. And that's huge, right? And I'm glad you said that, right? This is Oracle of Omaha wisdom he's spilling today, y'all. This is huge. This is Warren Buffett. Warren Buffett says the same thing, right? He invests in companies he understands, right? He understands. And for example, Warren Buffett, he doesn't hide this. He invests in Pepsi, Coca-Cola. Right. He also enjoys Pepsi, Coca-Cola to the point where he has a Pepsi machine in his office to consume the beverage. And so that's huge what Mr. Alex just said. He invests in companies. If you have an LG television, then you're already familiar with the quality product. You're familiar with what they produce and what they're about. And so why not earn a piece of the pie since you're already a consumer? And if you know a large community of people that own LG TVs or Apple, right? Most Apple investors own Apple products. And so that's huge. Thank you for saying that. That's big bucks. What are your thoughts around Bitcoin and investing in Bitcoin? Is Bitcoin an investment to you, or is it a currency? Because those are two separate things. And we are kind of getting mixed up in the sauce here. A lot of people saying, well, I want to buy a Tesla with Dogecoin. But then I originally thought Bitcoin was an investment vehicle. I'm not going to take my investment or liquidate my investment to go buy, a asset that depreciates in value. What are your thoughts on Bitcoin and cryptocurrencies as an investment or a currency?
For sure. So I see Bitcoin and other cryptocurrencies like it as fundamentally what they are. They're currency. They were invented by people who wanted to create a revolution in the way that we transact. And like that itself is very exciting. But to me, that doesn't qualify as something that I would want to invest in, because to me, an investment is something that produces cash. Like I want something that makes money. And to me, businesses make money. So I'm going to invest in businesses. Now, if I ever, for example, we talked about Tesla, if I ever do buy shares of Tesla one day, the reason Tesla purchased all of that Bitcoin the other day was not so that they could speculate in Bitcoin. The reason they bought all that Bitcoin was so that they could transact with customers so they could sell more cars. So to me, the hype around cryptocurrency and Bitcoin and the like, it's all very interesting. And I think it's amazing how it's revolutionizing the way that we spend money. But as an investment, it's kind of like saying, hey, Alex, like, would you invest in the euro or would you invest in Japanese yen? Like, maybe I would, but that's a totally different operation than saying I'm going to buy a stake in a company that makes money in currencies across the world. If you look at a lot of multinational corporations, they're making money in dollars, euro, yen, like rubles, all kinds of currency from all these different jurisdictions around the world. So to me, I'm looking at that and saying, like, hey, we could be trading like seashells tomorrow. You know, there's a zombie apocalypse, and like people are still going to buy Coca-Cola with their seashells because they want that drink, right? So that's kind of how I think about it.
Don't I gotta put a disclaimer to protect Mr. Mason. Do not go out and gather up all the seashells on the beach, y'all. But he's right. He is so right. He's so right. You could start today, and if Bitcoin to me is its value is determined. It's kind of like gold and silver. Its value is determined not by how much it's producing, right? A business produces value by the amount of profits it's generating and the amount of value it's providing to the economy. That's how a business is evaluated. That's how a company is evaluated. Silver and gold are determined based off of the need, right? What does the economy need and what is the dollar doing in comparison to that need? And so that's why you always see gold goes up in a bad economy, and the value of gold goes down during good economies. And so I think that's what Mr. Alex is going, is the value of cryptocurrency fluctuates, and it's not necessarily an investment. Its design, its original purpose was used as a currency. And that's why he brought the example of, would you invest in the euro, or would you invest in the yen, or would you in the Caribbean, would you invest in what's called Trinidadian dollars, TT dollars? So I think that's where you were going. Did I understand you correct? Did I assume
exactly
correctly?
Yeah, Marcus, you hit the nail on the head. That's exactly where I was going, because it's really advanced and it uses technology in a way that's never been done before, and that's super exciting. But the whole reason, Marcus, I got into studying stocks in the first place is I was looking at my funds one day in my 401k, and I was like, what is actually in these funds? I don't even understand where this comes from. When we're investing in anything, we could be real estate investors, we could be stock investors, Bitcoin, whatever. We always have to ask ourselves the question is, where is the money coming from? What is the source of my returns here? And with something like Bitcoin, at least right now, in a way that I think a lot of people are speculating in it, their entire premise for making money, and some of them have been very successful, but the way that they've made money in Bitcoin is by hoping that somebody else comes along later and is willing to pay a higher price than they paid, which is based off of, in my opinion, the hype of the actual technology. Is not based on any sort of cash flow producing asset.
Huge. Do you all see this? Do y'all see this, incredible man? Do y'all see the level of the big brain? This he broke it down like a doctor on a surgery table, y'all. This is huge. Give him another round of applause, y'all. This is huge. Mr. Alex, you are amazing, sir. we have a question from our audience, from our VIP sponsors of the channel. Check her out. So her question is, Miss Patience Dean asks, would you say the stock market is best for short-term investments with the uncertainties we've had? So that's her question.
Yeah, thanks for the question, Patience. So I think that there's two main ways to think about this. And it depends on the strategy that you want to pursue with stocks. There's the long-term kind of buy and hold path, which is like kind of more so what I do. Then there's the other path of trading, which can, I believe, also be a valid approach. So if you want to just buy a stock and hold it for a long time, the fact that it's going up and down and there's uncertainty right now, that's natural. This is what happens in the stock market. It's very common for stocks to go up and down, but over the long term, the annual rate of return over the past 100 years in the stock market has been about 10% a year. And there's actually never been a period of time of 25 years or more in the history of the stock market where you've lost money adjusted for inflation. So if you hold that money for a long period of time and you're cool with that, then yeah, that's a great option. If you want money for short-term investment, I would not consider that because things can fluctuate very quickly. I would look at more of like a trading approach where you're buying and selling more quickly, because that's more so how investors make money in the short term. So yeah, I hope that answers that.
I hope that answers your question. That definitely answered mine. So great question. Great question. So that's huge. Sir, and you talked about this earlier and we brought this up, but what are some things that do you consider most important? So like, again, I consider you the next upcoming Oracle of Omaha, right? And you're not in Omaha, are you?
No, I'm in Chicago.
Chicago. So the Oracle of Chicago. That's next, y'all. That's coming up. The Oracle of Chicago we have coming up. But sir, what are some things? I watch things like Shark Tank. I love Shark Tank because to get into the minds of an investor like yourself is huge to me, and to see the questions that you ask and to see the things that you divulge in a potential stock, right, is huge. One of the things I've heard, and you can correct me if I'm wrong, is people need to consider not just the business aspect, but the board members, right? The owners, the CEO, the CFO, the team that comprises that business. Would you say that's an important factor to consider before investing in a company? Is consider who's a part of that company, who runs it, who's in charge, who's leading it. Is that an important thing to consider, and why?
Yeah, absolutely. I think management is important for sure, because it's kind of like, Marcus, if I started a company and you wanted to invest in that company and I was the CEO, if you were going to hand me your money to grow for you, you would need to trust that I'm going to do a good job, right?
Right.
So if that was the case, you would want to probably know a little bit more about me. What's my track record in this type of business that you're investing in? And also, what's my personal stake in the business? Do I have any skin in the game? Because if the ship goes down, maybe you go down too, but then I would go down too, because I've actually put my money and my time into it. So yeah, I think evaluating management is super important. One thing you can look at, just like an actionable tip for you, if you want to look at the management of a company that you're thinking about investing in, look at how many shares of stock they actually own, and see if that's like maybe a sizable portion of their net worth or not. Because some management, they're running these big companies, but as soon as they give themselves shares for compensation, and then they just sell it immediately, they just want to cash out. Well, to me, like, that's not a good sign. If I'm thinking about investing in your business, I want you to be with me, right? Like, I want you to be buying with me. So if you see a lot more sells than buys, that could be a bad sign. If you see a lot more buys than sells, that could be a good sign, as a sign of confidence that management believes, hey, not only am I believing in this business that I'm running enough to buy from my own money, but I believe in it so much at this particular price, because that data is publicly available too. So you can look at the actual price of say the directors of the board are buying stocks. That's a useful tip, I think.
That is useful. And that's huge. And sir, I do trust you. So if you went into business today, I do trust you. I just don't have any money. But Mr. Alex, y'all, that's huge. He just broke it down, spilled some tea there, and that's huge, right? And so that's very important. So he just broke it down. Consider the partners, the CEO. If you believe in what Mr. Alex is doing, watch the money trail, right? Money is the quickest indicator to tell the health of a business. And if Mr. Alex is taking my investment dollars and he's investing it, not only my money, but his as well, is because he's invested in the business and he sees something that he's on the inside, y'all. And so he is pouring his own money into his own company because he sees the progression of it. And that's one tip of the many tips. Like he said, he has a whole show on this, y'all, a whole podcast that he talks and breaks this down for us on his podcast. And so one of the last bits of questions I want to ask, what are some pitfalls or what are some common mistakes that new investors make and how can they be avoided?
Yeah, for sure. I think that's one big thing, and this was a mistake that I personally made. So speaking from experience here, is not understanding the type of business that I was investing in and the risks associated with that type of business. Right. So I can give a little more detail on that.
Please.
There's a couple different, I think of them as personalities. There are different stock personalities. So you think of like a large, big company that's been around a long time. This is like a blue chip company, maybe something like an AT&T or a Coca-Cola or a Disney. These are going to move relatively slowly, but over time, they're going to keep increasing their profits year after year in most years. Another kind of personality of a company is cyclical. So there are certain industries that when times are good, they're like making all the money and their profits are just going straight up. But then in bad times, they're making no money at all. And for example, the oil industry, all of the oil majors last year, they just tanked because of COVID. No one's driving anymore to work. They're not making any money from oil. The price of oil was plummeting. And so my mistake was I invested in a business. It was actually General Electric that was highly cyclical. So profits go up and profits go down. And they have these really long cycles. It's a very complicated business. And like, I didn't understand that at the time. And I bought at the top of the cycle. So once the price of gas went down, price of oil went down, people stopped buying jet engines. Guess what happens to the company's profits? They go down, the stock price goes down too. So I thought that General Electric was a blue chip company because it used to be a blue chip company. And in some ways, I think they're making a comeback now, a couple of years later. But it's a highly cyclical business, and I didn't understand that. So if you're beginning to invest in stocks, I would actually say just outright avoid cyclical businesses completely because that's more advanced investment style. Focus on businesses that are consistently making more money year after year after year, and that'll help you protect your capital.
Huge. Powerful, powerful, powerful. That's huge. And I'll add some sweet tea, a little tinge on that. Look at companies that have lasted the test of time. So look at companies with a long track record, a long history, and see how they did during the 2008 stock market crash. Look back and see how they did during the 2020 Y2K epidemic. Go back and look how they did during the COVID-19 pandemic and see how those companies performed even when times are bad. That's what he's getting at, y'all. Look at the history of that company to see how they're doing. So huge. Give him a round of applause, y'all. Mr. Alex Mason here on the Gentleman Style Podcast Show, spilling some amazing tea. We have one last commercial break. Stay tuned, stay with us, stay engaged. Don't go anywhere. We'll be right back. Good day, podcast listeners. This is your boy, Marcus Norman of Gentleman Style Podcast Show. I wanted to let you guys know that we will be rolling out a new feature and adding a join sponsor button next to the subscriber button here at the bottom of your screen. Once you click the button, it will display 3 membership levels. Gentleman Gentry, which is our entry level, Duke Duchess, which is our season level, and the Emperor and Empress, which is our most sophisticated level, which you will receive unique perks and benefits at each differing level and gain access to our community tab. We will also be sharing polls, upcoming events, and interviews, as well as receive feedback from our sponsors directly. Your support helps me find new and exciting guests to bring to the stage live. Well, in order to get the higher end speakers, it requires, you guessed it, money. So thank you for tuning in to my channel. And if becoming a sponsor sounds good to you, then select the join button below and choose your desired sponsor level. Let's continue to grow and serve the future of generations of men and women to come. Love you guys. Bye. Hey everybody, we are back to the Gentleman Style Podcast Show. We have the incredible, the amazing Mr. Alex Mason. And this man just spilled some phenomenal tea. He is giving back in so many different ways, and this is huge. He just broke down stock investing, and he has his own podcast, y'all. Check him out on his website, www.stockstoryteller.com. This man is phenomenal. Mr. Alex, last question of the day. What are some, you talk about this on your show. What are some mental models, and why do they matter? Why are they important? What's a mental model that we should have or that we should incorporate into our lives?
Oh my goodness. I'm so happy you brought this up because this is one of my favorite topics. Mental models are so important. Mental models are basically this idea that there's about 100 or so ideas that if you can learn these ideas in your lifetime, your thinking processes and your decision-making processes will be so much better. You'll be able to think so much more clearly and not give in to all these kind of biases and like emotions that we have when trying to make hard decisions. And it applies to investing, but it applies to so many other aspects of life. And so one example of this, I'll just give an example of recency bias. This is a really big one. Where recency bias is where something happens, right? So say like you're walking down the stairs, and I'm just making this up right now, but you're walking down the stairs and you trip down the stairs, and you're like, oh, that really hurt. The next day, you walk down the same set of stairs and you think you're going to trip just because you tripped yesterday. And that's not necessarily true, right? Like maybe you were tired, maybe you're having a bad day, maybe you slipped on a banana peel. Who knows? You could have tripped for any number of reasons. But recency bias, it clouds our judgment because we think that what just happened is going to happen again right away. So looking at investing again, if we see a stock or we see Bitcoin or whatever it is just shoot up yesterday, we think, oh my gosh, like I got to get in because it's going to do it again. Well, yeah, you don't know that. And also the inverse is true as well. Just because something crashed and went down, that doesn't mean it's going to keep going down either. So that's just one example of a mental model. And I love talking about these because you can apply them to so many different areas of life. And I think they just really help make you a better thinker just by sitting down and thinking about how they could apply to different scenarios.
I love that. And that's huge. That reminds me of the saying with our parents, right? My parents, at least my parents, my grandparents, they always talked about, you should have more than one bank account, right? That stems from the experience that they had when the stock market went up and banks were shutting down, and the national stock market exchange had closed down and shut down. That happened during their lifetime. And so what our great grandparents and our grandparents learned is you should have multiple bank accounts. And that comes from recency bias because they experienced it where they had all their money in one place at one time. And the bank told them, we don't have your money. We can't give you any money today. come back tomorrow. And so that experience, that traumatic experience to have all your money locked up, brought about the thought process of diversification. And so sometimes it's applicable. Right? Sometimes it's applicable, sometimes it's not. But that's what he's talking to. He's talking about knowing when you're experiencing that mental model. And so that's huge. Can you give us one more mental model that you can share?
Oh, yeah, of course. Yeah, I've got a ton of them. So one of them is called the endowment effect. And this is maybe a lesser known one, but I think it's really important and really applicable to investors in particular. The endowment effect is when you own something and you think it's worth more than it actually is just because you already own it. So if you, for example, you own a classic car and say you're really into cars and you got this car in your garage, you never want to take it out and drive it because you don't want it to get dirty. You clean it up all the time. You're checking the parts and it's just like this beautiful car and you paid, let's just say $50,000 for it. In your mind, that car may be worth it might as well be worth $500,000 to you. You know, someone couldn't take that from your hands if they wrote you a check for $500,000. But on the open market, objectively, the value might be $50,000, $60,000. So just because we own things doesn't make them worth more. Like there's a saying that goes like a stock doesn't know you own it, right? So if you own Tesla or you own General Electric or Hershey or whatever, those stocks, they don't know that you own them. They're going to be valued based upon market forces that are completely outside of you. So as an investor, if you own a stock, just kind of as a reality check, think about the endowment effect. Just because you may have seen your stock go up 1 to 10-fold, that doesn't necessarily mean it's worth it just because you held it for that amount of time. It's just a mental perception.
Woo! I felt attacked. He was talking to me, y'all. He was talking to me. I felt attacked just now. But that's good, right? I'm glad you said it. I appreciate you saying it. We need to hear that, and that's powerful. So, sir, how can people connect with you? How can my audience grow with you? How can we tune in to what you're doing and the movement you're on?
Absolutely. Thank you, Marcus. So definitely check out the Stock Stories podcast on Apple Podcasts, Spotify, anywhere you get your podcasts. It's called Stock Stories. And I'm coming through every single week with a new case study of a company. I'm going through the entire S&P 500. I'm over 100 companies in so far. So definitely check out the podcast there. And also on Instagram at Stock Storyteller. You can find me there too.
There you have it, y'all. The man, the myth, the legend. Here today on the Gentleman Style Podcast Show. He is breaking it down. Tune into his podcast. Check him out, Stock Stories Podcast, and his website. Again, for my audio listeners, because this is on YouTube, and check us out on YouTube, www.stockstoryteller.com. I almost forgot a W. I don't know what's going on. I need some tea. Alex, I need some tea. Help me out. But this is impactful. This is powerful. This is huge. Mr. Alex, thank you for being on the Gentleman Style Podcast Show today. I appreciate you, brother. I appreciate you taking time out of your busy day to give back in this way. This is huge.
Thank you, Marcus. Again, appreciate you having me on, and I love the energy. Keep it going.
I appreciate it. I will. And I want to say the same thing to you, sir. You keep going. You keep pushing, and you keep doing what you're doing and investing and educating, because you're an educator and you're giving back and you're helping us, we, all of us, get to a better place financially. So don't ever give up, because we need you. We need what you're doing. And the world is changed by you and impacted by you every single day.
Thank you, man.
Absolutely. And thank you all, my audience, for tuning into the Gentleman Style Podcast Show. I hope this message has served you, and I hope this has helped you. I hope Mr. Alex has shared enough light on and made an impact in your life. He's definitely made an impact in mine, and this is absolutely phenomenal, and this is necessary. And if you haven't yet, check him out at www.stockstoryteller.com or his podcast, Stock Stories Podcast, on Apple, iTunes, and where you get your audio streaming service. Check him out. Like I end every show, Take care of your families, take care of your friends, and take care of business. This is Marcus Norman of Gentleman Style Podcast Show and Mr. Alex Mason of StockStorytelling.com. Love you guys. Bye.